evening or good morning, depending on which time zone you are in, to this for this brief webinar session. I have one request to you, and those of you who are registered and are participating today. If you don't mind, put your videos on. I think it's always nicer to have smiling faces as opposed to black boxes on the Zoom screen. So if you don't mind, put your videos on. It'll be, I think, nicer experience for everyone. Even if you're in a sort of mobile video, that's also great. So I see David has been kind enough to accept my request. I don't know if anyone else. Okay, Nurul, great, thank you. Arani is joining. Hello, Arani, good to see you. Shrikant, okay. Muhammad Hassan, good. Okay, Omar, great. It's only for half an hour, 35 minutes. So I think not a long time, but I think you'll enjoy the process also much better if we are seeing each other. Okay, some of you want to put your videos on, that'll be great. Okay, so this is really a brief introduction to a longer webinar series that I'll be conducting on the whole topic of AI, ML in finance. And as you can imagine, this is an extremely hot topic nowadays. Of course, finance and fintech is a very big domain, and finance in many ways has always used technology in multiple ways. But the certain recent, let's say, maturity in the kind of applications in AI and ML that we are seeing today has really changed the landscape in terms of what is possible in finance and fintech. So we are already seeing some initial applications which are quite extensive, and I'm sure we'll see many more disruptive applications in finance and fintech in the future, which are enabled by AI and ML. The goal of this brief webinar is just to give you a sense of the kind of topics we'll cover. Of course, in a 35-minute session, you cannot really cover everything, but I'll give you a flavor of the kind of things that we'll cover. So I'm going to share my screen now. Can you let me share my screen? I think my share screen
sure.
is disabled.
Okay.
Okay, I'm still waiting for the permission. Okay,
Yeah.
I think I should have got the permission now.
Yeah. Yes.
Okay, so I hope you can see my screen. And
yes, we can.
One of the starting points for you to reflect, and this is really a point of reflection, is if you think about these two axes, one axis being the amount of technology change that we are seeing, and the other axis being the amount of business change we are seeing. And you have some very simple endpoints out here of low and high on these two dimensions. Ask yourself, where do you see your business currently positioned, and where do you see your business headed in the next 5 years? Now, the chances are quite high. Of course, we did this interactively in a smaller group setting, or if I put into group work in a smaller rooms, that you would probably see yourself all heading in the top right dimension. So clearly the area which is going to be the future is out there. Doesn't matter which position you are in today, but the trajectory of movement in finance and in fintech really is in that direction. So you're looking at an environment where there's a lot of technology change, and a lot of business change also is going to be forthcoming. Now, to understand, just to visually understand some of this technology change, it is useful to look at a simple simulation. You probably all have heard about the classical Moore's law, in which essentially Gordon Moore in 1965, he said that computation would double every 18 months. Now, this is a small simulation that I'll show you, in which someone has taken one lake in the US, Lake Michigan, and they have said that, well, basically Lake Michigan's volume of water in fluid ounces is approximately the same as our brain's capacity in calculations per second. So suppose we started filling water in Lake Michigan at the same rate as Moore's law. So every 18 months, you double the ounces of water you put in the lake. What will that visual look like of the lake filling up? On the top right, when I show the simulation, you will see the year, and you will see that simulation going between 1940 and 2020. So I'm going to now show you the simulation. And the simulation is going to be very useful because it'll give you a visual representation of the meaning of exponential progress, because this is what we always talk about in computation and what is happening. So you see on the top right, the simulation is running. I hope you can see the simulation. And what you see is that starting in 1940 till 2010, so almost 70 years, you don't see any blue. So water is getting filled at Moore's law, doubling every 18 months the number of ounces, but you hardly see any blue in the lake. And then between 2010 and 2020, suddenly the amount of blue explodes. And what you can imagine is if we take the same simulation and make it go beyond 2020, that explosion of blue will rapidly cover the US and rapidly cover the entire world, entire planet. Now, this really is the power of exponential growth in technology, exponential series. And this is what we are really having to contend with in many sectors, of course, including finance. I will show you now a simulation, not simulation, a graph that sort of outlines how technology has in fact moved. Now, this is a graph that actually plots Moore's law. And what you see is that this is a logarithmic scale. So a linear curve on a logarithmic scale basically means that on a linear scale, this curve would be exponential. And then you see, and this is in 2019, there is one chip that has been invented that shifts the rate of this exponential linear, the logarithmic scale linear line dramatically upwards. That kind of a shift is dramatic. And what that tells you and what that shows you is that Moore's law is not slowing down. If anything, it is speeding up. Moore's law has been running since 1965. So roughly 55, 57 years. You saw in the Lake Michigan example how for the first 70 years, you don't see the blue in the Lake Michigan. And after 70 years, the whole thing explodes. So if you take the same analogy out here and you see that computation has been doubling for 57 years, it basically means that we have seen nothing as yet. The real explosion in computation, the real explosion in how technology will impact finance is going to happen over the next 10 years and beyond. Because the amount of computation available in finance is going to be dramatically high as compared to what the situation is right now. Now, the second sort of curve points to a very important constraint that we all face. So here you see a linear line and you see an exponential curve. Now, what you see is that for a long time, the difference between a linear and exponential curve is hardly visible. It's more or less the same. Linear, exponential, it looks pretty much the same. And then after a certain point, the difference explodes. And the gap just keeps increasing more and more. And this is the precise challenge that we are facing right now with technology in finance or in other sectors, is that we are at that threshold of explosion in technology. At the same time, human beings are actually operating in a linear world. So we naturally tend to design organizations, think, and operate in a linear space. And the very simple test of this is, if I ask some of you, what will life look like in 5 years' time? A natural human reaction is to go back 5 years, extrapolate from there, and just make predictions of what will happen in the next 5 years. But what you see is that that kind of a simple linear extrapolation works well in the initial phase. But once that exponential curve hits a tipping point, then that kind of a linear extrapolation doesn't really work very well. So what we are seeing is we're seeing in a world where the gap between the capability of technology and the organizational design of organizations is increasing. And we can talk about why that is the case and so on. If you look at fintech as a domain, fintech is massive. Okay, it covers a whole range of sectors out here: lending, blockchain, crypto, regulatory tech, regtech, personal finance, insurance, capital markets, wealth management, and so on. And historically, it is true that technology has been used by all these domains more or less, but it's been fairly intensively used in all domains. In fact, finance can be really seen as one of the leading advanced users of technology. Now, what is happening right now is that because technology is progressing so rapidly, it is enabling great progress in domains like AI and ML. So the whole progress that you see in AI and ML is real, and it is being enabled by this rapid progress in technology, in the underlying technology that is happening around us. And of course, technology and AI can now be used by banks and financial institutions in different ways. This is just one classification of how AI technology is being used by Citibank. But similar things are there in many other organizations, many other finance organizations. So here, for example, in this simple graph, what Citibank has outlined is sort of 3 dimensions of operations: the customer side, the customer side. Sorry, one second. The customer side. Let me see my thing. One second here. The customer side, the operations, and the risk management, which are all very important. And then they have said, well, let's see some of the benefits in how this technology can be used. So, for example, on efficiency improvement, they're saying, well, robo-advisors, as we all know, are 80% more cost-effective than traditional models. And because robo-advisors, you can have virtual agents, you can in fact scale the business non-linearly. You can handle many more customer queries. Today, for example, the whole idea of portfolio management can be done at a much more smaller level of investment as compared to even 10 years ago. Earlier, required a certain amount of money before banks or institutions would give you wealth management facilities. Today, in fact, they can be handled in automated fashion much more easily. These systems can also make recommendations for you, just like Netflix or Amazon makes recommendations to you in terms of what to buy and what to see next. These systems in banks and institutions can also make recommendations to customers about what other products or what other investments might be suitable for you. Similarly, you have in the operations side, you have RPAs, robotic process automation systems that reduce processing costs. How? By automating, in fact, the kind of tasks, routine tasks that people do. And if you add AI and ML to it, essentially these RPA systems are becoming also more and more intelligent, and they can do increasingly larger variety of tasks done by human beings in banks and institutions. Similarly, in risk and compliance, you have lots of areas around cybersecurity, fraud detection, where AI and ML is being used extensively. This is just a small little sample of the kind of applications. And I have done a fair bit of work with many institutions in finance and fintech, looked at a number of examples of how AI, ML is entering into finance, fintech. And if I had to draw a high-level summary, a very high-level summary of what are the major ways in which finance or fintech is getting affected or influenced by technology, I would say the traditional one continues. So traditionally, technology has always been used by financial institutions for digitization of processes. And that has always led to reduced cost, better time management in terms of delivery of outcomes to customers, and of course, reduced risk. Risk management is very important in financial institutions. Today, all the digitization is happening to a better degree, to a higher intensity with AI and ML systems. The example I gave you earlier, robotic wealth, wealth management systems. Robo-advisors is an example of that. Earlier, that wasn't possible traditional automation. Today, with AI systems and AI bots, that kind of wealth management is easily possible. Also, what you're starting to see is convenience. And I would argue that a lot of fintechs today that you see in the world are really playing that convenience angle, which can be titled as loosely under the umbrella of consumerization. Companies like Amazon, eBay, and Netflix, and so on, have brought a certain ease of interaction in the online space to consumers. So people are used to shopping in a certain way, what Amazon allows you to do so. Netflix allows you to go and choose and watch things in a certain way. Other online e-commerce providers do things in different ways, whether it's eBay or Etsy or whatever different channel you choose. So that consumer sort of ease of use has been a very important part. And you see many, many new fintech startups providing that kind of friction-free environments, higher level of personalization, and of course, this integration across channels. Now, if you look at these two areas of how fintech is evolving and how technology is affecting finance, I would argue that these are fairly traditional. If you look at many of the new banks, or even some of the transfer companies like TransferWise and so on, they are not really radically changing the business of finance. What they're doing is taking a small slice of what traditional finance companies do and doing it better, easier, cheaper, more automation, more ease of use, just somehow making it more attractive for the consumer. Or sometimes they're using this to go and reach a new customer segment, a customer segment that traditionally perhaps was underbanked or was ignored by traditional institutions. Now, what is much more interesting is this one, where the new business models emerging. And that's where I think the disruption is emerging in fintech. And that's where I believe we haven't seen the full range of things that might happen in the future. Crypto, for example. Fair enough, we are going through a crypto winter right now, but cryptos are here to stay. No one is going to remove cryptos. What we are seeing is there's a whole fight happening between the central bank digital currencies and the cryptos in all countries, whether it's in the US or in China or in India. Why? Because there's a power struggle between who controls the money flows in the country. Do the central banks continue to control it as in the past, or in fact, is a decentralized model that's emerging that is very different? The same idea of having tokenization of assets. Nowadays, you can actually take a physical asset like a building and tokenize it. And how you actually share that asset is a very interesting question, because traditional banks and institutions like PE companies, what they do essentially is act as intermediary. So you have some people who have money, some people who need money, and the PE institutions, private equity institutions or banks connect those two individuals or those two groups. Now, suppose those two groups can come together without the help of an intermediary by some algorithmic matching scheme. That would change the nature of finance. Think of it. Tinder does the matching scheme for matchmaking, right? You don't need matchmakers traditionally. You have an algorithm deciding how to match people up. Now, the same kind of thing taken to a level of sophistication which is higher can be applied to finance. Maybe it's not yet here, but it's going to happen. As Web 3.0 models become more popular, you will have a whole range of decentralized architectures and business models emerging. Keep in mind that Web 3.0 today is roughly at the level of maturity of where Internet 2.0, Web 2.0 was in 1990s. Okay, in the early 1990s, when you had initially the first e-commerce companies coming up, people were very concerned about, can you actually trust the system with your credit card? Can you trust the system with passing messages? Will that work? Will consumers trust it? All those questions are there today with Web 3.0. Can you trust the Web 3.0 architecture? Can you actually trust Bitcoin? Can you trust crypto and so on? And those questions are a natural part of the evolution of new decentralized finance models. This whole idea of having DeFi models is something which will become, I think, a reality of tomorrow. Now, this kind of a disruption is something which will play a very important role going forward. And we are seeing all of that happen to some degrees already. So, for example, the part of the disruption which is more, let's say, mature is banking as a service. Traditionally, banks, they did not offer the APIs on a public basis. They all kept the APIs private. And then, for example, now today banks offer the APIs to other companies. And so if you're a travel company, you can offer a loan to your customer to buy a plane ticket. And that loan is provided not by you as a travel company, but by a bank that you have as a partner. And that is done through a digital API, open API access. So you can connect a travel company with a finance company. And you can actually build these models of embedded finance. And there are other kinds of models of finance emerging with this whole open API kind of a trend in finance. If you look at, for example, the whole emergence of big tech companies in finance, that will actually impact the whole range. The best example of that is what happened in China with Alibaba and Ant Financial, where Ant Financial became this huge monster in terms of a financial institution. And eventually what happened was the traditional state-owned banks in China put a lot of pressure on the government to curtail and pull back Ant Financial. Now, the similar things are going to happen in other parts. You look at, for example, now Amazon is offering loans to its small businesses on the Amazon marketplace. On the Amazon marketplace today, there are roughly 400,000 small businesses, or maybe even more. Amazon has detailed information. Think about the whole process of how it makes a loan decision. Amazon has detailed information on the customer interest, how many people go and view the product. Amazon has detailed information about how many people buy the product. Amazon detailed information on the customer satisfaction ratings on the product, and a variety of other operational information about the company. That kind of information is extremely rich and allows Amazon to make very good credit decisions on the banks, on the small businesses potentially. Same thing with Tesla, for example. Tesla, because of its whole model of having this kind of a connected car, Tesla is able to monitor the driving behavior of each and every single car and each and every single car driver. And as a result, Tesla is able to offer a car insurance that is much more competitive than other car companies. Typically, when you buy a car insurance, you get insurance delivered to you based on your age, your location where you live, and maybe your previous driving habits. But now with Tesla actually has detailed driving behavior based on your actual use of the Tesla car. So they are able to offer Tesla insurance to their car drivers. So this kind of a data-driven approach to finance is becoming more common. And if you combine all these trends, whether it's the data-driven approach that I described now, or earlier the Web 3.0 approach of decentralized finance, I think you're seeing a future where there'll be tremendous change in how AI, ML impacts finance, because the whole landscape of finance is going to change. And keep in mind that Lake Michigan simulation that I showed you earlier. We haven't seen the full impact of the technology revolution. We are just now 55, 57 years into that process of doubling of Moore's law. And in the next 10, 15 years, Moore's law is just going to explode, and the amount of technology capability out there is just going to increase dramatically. So when you think about, for example, things like metaverse, don't think the metaverse will not exist or will not happen. Just because Second Life did not happen 10 years ago, that doesn't mean metaverse will not happen much faster than what you think, because the technology capacity behind it is going to keep on increasing. So fundamentally looking at dramatic change going forward, and this kind of change is going to change the landscape of finance, of fintech, of the kind of applications we see in the space, and the way finance is integrated into our lives. So let me stop out there and see if there's one or two quick questions, and I'll be happy to take one or two quick questions if you have any questions now. You have to raise your hand. So then I can ask you the question, because I see in the chat there's a question. When will the job market for AI and fintech boom? It's already booming. So if you have the right skills, you can get tremendous salaries, tremendous salaries. There's a huge shortage of skills in this area. Any other question? What are the role of chartered accountants? It's whatever you want to be, whatever you want to make your role be. Accounting is getting transformed completely too. The whole nature of how data is used to measure activities, how data is used to actually manage activities is changing dramatically. And you add to that, for example, in accounting, the whole notion of how sustainability is becoming a big issue. That's not finance necessarily, strictly speaking, but finance sustainability also is important. Sustainability is becoming an important part of reporting standards. Now, there's a whole international sustainability standards board that is now actually looking at how to make sustainability a core part of the reporting requirements for companies, and that's coming. That's coming, in the next 2 years. It'll be there as a reality for all companies in most parts of the world, including in India and other parts of the world.
Okay, I just got a message, sir. How does algorithm works in stock market, and is it effective? This is the question from Rakesh.
Well, algorithms are basically many, and the way they work is different in AI-based systems as compared to traditional systems. The traditional computer programming, what you do, when I did computer programming as a child, or not as a child, but as a young adult, was really you tell the computer what to do. So an algorithm is, okay, you say, if this happens, you do this. If this happens, you do this. If this happens, you do this. And then the computer actually executes. And it's your challenge to be able to keep track of all the different things that can happen. And if you think of all the different things that can happen, that's great. An AI system works very differently. An AI system basically learns about how to interpret, how to react to different situations that you haven't shown it before. And it learns that on the basis of history or past data. So the whole design of AI systems is moving away from specifying a certain order to actually feeding the system with a certain history of data. If the right history of data is there, then essentially you can, in fact, get a lot of benefits. But this is the kind of things, we'll talk about in the course also when we'll describe some of the AI systems in more detail, because the way AI systems and machine learning systems works is fundamentally different from the way traditional computing systems work historically.
Okay. Rakshit Murthy, he has questions. Cryptocurrency is treated as an investment tool. Can it replace regular currency?
Absolutely, and that's part of the reason why the central bank digital currencies are being launched, and that's why central banks are essentially, currency is what? Currency is some method of value transfer that you trust. So the question is, what do you trust? Do you trust central government? Traditionally, that's what's happened, or do you trust the algorithm, which is doing that in the via blockchain architecture or something? So as long as you have the trust, whatever you exchange for the trust is a currency that's valid.
Okay. Hemant Biswas, his question, what are the coding languages we should learn to start with ML and AI? And obviously, like this will be more of a technical thing, but you can let us know. And
No,
also,
but I can
like,
give you a response to that. I think there are 2 or 3 things that are important. If you look at building AI systems, the coding of the system is a little bit less important than getting the data, cleaning the data, making sure the data is actually unbiased, representative. So data cleaning and data preparation is almost like 80% of the work in building AI systems. So data cleaning, data preparation is the kind of work which is not language dependent, but which is very based on statistical tools and other kinds of mathematical approaches, which is not typically taught in a computer science class. So I think, yes, if you learn, basic programming in Python or other kinds of languages, it helps you to build AI systems. But right now, many AI systems are available in package form or pre-packaged formats. And then the challenge for you is to be able to collect the right data, clean it up, make sure it's the right, because if you have the wrong data, the AI system will work in a different way. That's the problem.
Okay. J. Patel, are AI ML capable of managing long-term investment funds where generally fund managers tend to chase value based on many
everything. Yeah, the answer is the system will do what you train it to do. So if you actually give it the right training data, it can do, the interesting things about AI systems right now is that it is able to do things that human beings are not able to do. There's a real example of an AI system for detecting heart problems in medical domain. It's another domain where AI is being used a lot. And in one example, they built the system built of 4 million ECG. ECG is the reading of the heart. They took 4 million examples of ECG over 20 years data, 4 million, and they built an AI system. And the AI system is able to predict heart problems in patients where the doctor cannot find a problem. The doctor looks at the ECG and says the patient is fine. The AI looks at the ECG, same ECG, and says the patient has a problem, and the AI is right. So what I'm just giving you is that, now what is happening is with more and more data, this one, for example, has 4 million ECG readings over 20 years, AI systems are able to find patterns that even human beings are unable to recognize. And this becomes an issue when you look at, large amounts of data. Think about in the stock market, there's such a lot of data that is available everywhere. Or in a city environment where there's so much of data about pollution, cars, and everything else. Human beings can't handle that kind of complex, multidimensional data. Our minds are not geared up for that. So really, that's where AI becomes very powerful, because AI systems are actually pretty powerful and do it much better than human beings in those complex data environments.
Great. Okay, there's another question. If you can read, can you please provide? Okay, can you please provide a clear example of AI versus ML in accounting? Because most of the times it looks similar, even in the ECG example.
Well, take the class, then you'll have more time to discuss that. I need to explain more of AI and ML for you to explain that. I'm sorry, but I have to leave, unfortunately, now. So is any one last final question? Or if not, thank you very much for joining. And hopefully I see some of you in the cars. Okay?
Yeah. Thank you so much, sir. Thank you so much.
Thank you. See you. Bye-bye.
Yeah, bye. And thank you, delegates, for joining.